Rahul, thanks so much for taking time out. Let's get in a sense as to what your outlook is within some of the select pockets that have been in focus, in particular in yesterday's trading session. For instance, some of those shipping and defense stocks were abuzz. What's your outlook within this sector?
Hi, good morning. So I think the markets are into a real bull, and what we see is every day we see that some of the other sectors keep on outperforming. Be banking on one day, be IT on the other day, and a lot of news flow keeps on coming in, and the sectors just gets re-rated. So I think yesterday we saw all the shipping stocks and a few defense names, getting into it. Some global news coming out of it, and post that I think entire sector has got re-rated. So I think to be very selective in this kind of names in terms of the entire sector. And then I think if we talk about the defense sector as a whole, I think they have been, the 3-4x or maybe more in some cases in last year and a half. So I think selectively all these stocks should do well going forward.
Selectively shipping stock should do well, or selectively stocks should do well? Because stocks selectively always do well.
So I think very few select stocks, like say maybe on the PSU sides, I think they've done very well. So in that space, I think we continue to remain, I think, positive on that side, like stocks like I think Cochin Shipyard, or maybe in this stocks like maybe on the defense side, BL. So there's too few names have been positive on it.
Meanwhile, Rahul, just wanted to get in your take as to what you've made of the Zee Sony merger now, almost perhaps being at the brink of a collapse, with the timeline, looking like it may not be really extended for the merger. How are you reading into the story as to how it's unfolded and the updates that we've gotten so far? What does this spell out for Zee Entertainment?
So I think very difficult to comment on this terms of where the merger will happen, not happen, and what the story will be. So I'm not an expert on that perspective, but I think way the stock has been, and I think looking at the way the franchise network, and if this goes through, I think easily, then I think there will be a huge upside in over a period of time as the entertainment. So I think looking at current valuations, if you're an investor, and I think offers value at current levels, and maybe if you look at peak historic valuation versus in last 6 months or a year, way the stock has been. So I would suggest, I think if you're an investor, one should look at it buying a stock at this time.
What will you do with IRDA now going forward, Rahul? Do you think there is merit in booking profits, or one should still ride the happy journey?
Sorry, which company?
IRDA.
So very difficult, but I think I would advise to levels.
Say book profits, when House of Motilal Oswal says book profits, आवाज भी drop हो जाता है. I think we lost your audio there. Did you say book profits?
Yes, I said book profits. So I think the stock has done quite well. I'm sure you know about it. And I think going forward, we feel that a lot of other stocks and the entire other sectors, and especially in the financial space, looks quite promising. So I think one should look at booking profits at these levels. That is what we feel.
That's the hallmark of Motilal Oswal, always bullish, right? When their experts recommend that book profits, also the natural audio drops. So when Rahul had to say IRDA and book profits, the audio actually dropped. So I don't blame it on Rahul, but that's the way the positioning is of IRDA. 110 rupees. I mean, what a multi-bagger it's been. 32 rupees, 33 rupees over the IPO price, went to 120, it's come down to 110. I'm going to change gears and talk about metals, and especially ferrous and non-ferrous. Rahul, which is a better bet according to you, ferrous or non-ferrous or non-ferrous?
So I think if you look at the entire sector, has done well. Ferrous and non-ferrous both has done well. So going forward, I think if we see yesterday's that deal coming from by the Nippon buying out of that US steel company, I think that deal has come out. Nobody was aware about it, that it came off yesterday, and obviously premium to the market price. So I think we might see globally all stocks have done well, and obviously domestically also looks like that. I think all the steel companies definitely would benefit and would do well. So, and I think if we see in last few sessions, if you look at it, I think PSU names in a steel companies also, and as I said, that entire sector has done well. So I think steel basically looks promising to me, and If you look at SAIL has done well, moved up 15% in last 15-20 days on Nalco or so on and on. So my preference would be JSW still at this levels. I think the stock reacted a little bit negative, but I think offers value at this level, and that would be good upside from current levels from here as well.
There's been so much policy flip-flop when it comes to the entire sugar basket. The stocks have certainly been a buzz of late. What's your outlook, Rahul, as to what this news spells out in the long term for sugar?
So we've not been covering any of the sugar stocks, so it would be difficult to comment of any of them.
Let's also get a take from you, Rahul, as to what the outlook is when it comes to some of those IT stocks, because the comeback that we've seen within the IT space has been fairly commendable. But the question is what the next year really spells out, particularly when it comes to large cap IT. Is there merit in looking at these names?
So I think large cap IT companies, I think if we look at it, have underperformed the mid cap IT companies. If we look at broadly in last year and a half. So I feel that the stocks have just been flat or maybe 5-7% plus minus if you look at absolute returns in last year and a half. So I think if I have to look at it, large IT companies positively looks quite promising from it. Maybe just to give you a perspective, I think TCS obviously in the large cap have done nothing in much in last few months, and but looks like I think way the earnings guidance will come to this quarter, and plus way the performance has been, I think way the deal pipeline what they have. So recently only you saw that the second largest deal in that which they did it. So I think my sense is I think all large cap IT, the risk to reward is quite favorable, and when you have market scoring high, then I think all the sectors tend to move up, and I think this sector has underperformed vis-a-vis others. So it looks like I think that all large IT names like TCS, Infosys, HCL, all should do well from current levels.
Okay, fair enough. That's the view coming in.